Hello, my name is Steve Bigelow with the Candlestick Forum. The market trend is very easy to identify or analyze based upon the indexes staying above the T-line. Note how the Dow, after the big reversal down here, has stayed up above the T-line, and not only stayed above the T-line, but today they traded up through the 50-day moving average, making the probabilities with this little slow curve J-hook pattern, the 200-day moving average, the next likely target. That same analysis has been applied to the NASDAQ, where when it came back up doing a J-hook pattern, that not only is the NASDAQ staying above the 50 and the 200, but you can see how the T-line's been acting as support this whole way up. There's some very powerful trade setups. ISRG, you can see what we call a classic pattern. A classic pattern is a fry pan bottom with the expectation of a very strong price move coming out of a fry pan bottom. Then the J-hook pattern. The prerequisite for a J-hook pattern is a very strong price move, which is produced by the fry pan bottom. Today it broke out into new higher levels, and we know the simple rule of a J-hook pattern, that wave 1 and wave 3 are usually the same magnitude. You can see that same scenario in Tesla. There's your J-hook pattern. And notice what makes this a very easy identifiable pattern. Look how they couldn't close below the T-line. The T-line is a very powerful trend indicator, especially when you're using it in conjunction with candlestick signals. This allows us not only to identify when it's time to get in, either on stocks, but more preferably, the ultimate timing for option trades. And we can see that same scenario over here in blue. Another fry pan bottom. This is what we call a bobble breakout. This is even a more defined J-hook pattern. Notice how it came up, failed at the T-line. Failed at the 50, pulled right back to the T-line, and now has come back up through. If you took the 50 out of here, you'd have a J-hook pattern. This is a very high probability trade setup, making the prospects of heading up to the 200-day moving average, which is up in this range. Yeti, the same scenario. Your bobble breakout. Positive trading confirming the breakout, making the 200-day moving average your next target. This is not rocket science. This is merely identifying what happens in human nature time after time and what type of patterns the price moves from human nature set up. This is the T-line crunch. We started recommending APLS, one of the biotechs, as it moved up. Notice the doji sandwich, a very strong bullish confirmation to continue the uptrend, breaking out through the 50. The T-line crunch, notice how they couldn't close below the T-line, and the T-line crunched right up through the resistance level, pushing the price up higher. All you can do with this one is stay long as it stays above the T-line. Same scenario on a recommendation of CRY. It stayed up above the T-line. Now it's broken out through the 50. Next likely target, the 200-day moving average. And ICAD, you can see the fry pan bottom, J-hook pattern, bobble breakout, making the prospects of a much more upside in progress. The market trend still shows us the bulls are in control as long as the market indexes stay above the T-line. Thank you for listening. We will be doing a training on how to utilize the appropriate option trading strategies with the appropriate candlestick patterns. That's set up for May 2nd, this coming Saturday. Come join us. Thank you for listening.